Hello and welcome to this webinar, Chartered Financial Analyst CFA Level I. This webinar is about portfolio management, and there's a lot of things we need to talk about, we need to think about. So first of all, it's portfolio management and overview, the different steps in portfolio management process, like planning step, like execution step, and like feedback step. There's different types of investors. There's individual investors and there's institutional investors. Second reading that's necessary to understand is Portfolio Risk and Return Part 1, in which we will think about the different means, like geometric mean, money-rated mean, etc., and the distributional characteristics, like skewness, like kurtosis, like the normal distribution, the normal distribution we need to think about with the right mean and the right standard deviation. So this is when thinking about portfolio risk and return part 1. And then there is risk aversion, like risk seeking, risk neutral, risk neutrality, and risk aversion. So, and you need to think about and you need to know the different lines, like capital allocation line, capital market line, and security market line. Then there is portfolio risk and return part 2. And the different risks related with this. So like systematic risk and non-systematic risk. There is the capital asset pricing model. There's different ratios like Sharpe ratio, Trainer ratio, M squared, and the Jensen's alpha, the so-called Jensen's alpha. Next reading that's necessary to think about is basics of portfolio planning and construction, like the investment policy statements, the IPS, like statement of purpose, including investment constraints, including investment considerations, risk objectives like absolute risk or looking at relative risk. Then there is the introduction to risk management, like risk governance, risk tolerance, risk budgeting. The identification of risks like financial risk, non-financial risk. And of course, it's about measuring and modifying risks. You need to understand the drivers of risks. You need to look at the metrics of risks like the Greeks, so delta, gamma, vega, and rho. And the last readings of portfolio management deal with first technical analysis and then fintech. So technical analysis is about those graphical aspects like charts, like looking at trends or chart patterns, like reversal pattern and continuation patterns, technical indicators, and so on. And then there is fintech. Fintech in investment management. We need to look at big data. We need to look at big data characterized by volume, velocity, and variety. And of course, artificial intelligence. So machine learning algorithms and the types of machine learning like supervised learning, unsupervised learning, and deep learning. See you then.